Trading Ideas. Abneesh is with us to talk to us about what's on his mind, and we'll start with Z. Abneesh, good morning. Great to have you with us here. Thanks for joining in. So the Z bit, right? I mean, it was a bit of a shocker the Friday before last with the shareholder approval coming through, and then that SEBI order. We understand yesterday it was mentioned in SAT, so they've appealed to SAT, and I think there's a hearing which is scheduled for the 13th. What is your view now on Z, Abneesh?
Yeah, thank you and good morning. Yes, we'll continue to prefer PVR and Saregama in the broader media space. On Z, you are absolutely right. There are two monitorables currently for the stock, which are both, frankly, a bit non-fundamental. One is, of course, the SAT hearing, which you just mentioned. Second, of course, is the arbitration, which is happening with Star on the sports event. So these two are big overhangs, and we'll get more clarity in the coming months. For example, the Star arbitration will get clarity in Q3. And on the SAT, clearly, that's something which will drive interest from a minority shareholder, because currently promoter stake at 4% is very low. And that obviously means that skin in the game perception is currently an issue. Coming to fundamentals, if you see clearly, the things are looking up. Z5 saw very strong numbers, 58% growth in revenue and profitable in terms of EBITDA also. And overall subscription also saw a very impressive number, 16%. I think in Q2, this will further accelerate because most of the key matches of FIFA were in Q2, and generally the revenues will accrue more when the key matches are there, especially in terms of advertising. Second, of course, in Q2, we'll have the Bundesliga and Serie A also, and Z will get more time in terms of looking for advertising. In Q1 in FIFA, if you see, the time available for marketing was very, very limited, and very high ad spend Z had to bear to promote its 4 new sports channel and FIFA, which in Q2 won't be there. So I think fundamentally things are improving on a 9,000 crore market cap, 2,200 crore cash and equivalent is there in the company. But unless we have more clarity on the SEBI SAT issue, plus the Star arbitration, I think the stock will still underperform Saregama and PVR in our view.
So the SEBI SAT issue aside, purely on numbers for FY27, Abneesh, what are you working with in terms of a revenue growth, EPS growth, margins, subscriber ads, and even on the advertising front?
So good question. If you see here, the main driver for Z is clearly subscription. Last 11 quarter, the advertising decline has been there. I think this is a broader theme where the legacy channels, TV channels are seeing shift away from their advertising towards the OTT and digital. So clearly that is something which will continue in the near term. Of course, from Iran crisis, there was a severe impact on all the TV channels in terms of FMCG cutting down on advertising. As the geopolitical issue gets resolved, that will come back. And definitely we do see that the subscription revenue growth will remain strong. So how we see FY27 is strong subscription growth will continue. If you see numbers, the stock is available very cheap, right? 11 times P multiple of FY27. And here, if we knock off the 2,200 crore cash, it will become even cheaper at say around 7 times. So we see that advertising decline 11 quarters has continued. Some more decline will continue, but subscription will more than make up for it. If you see overall revenue growth was 4.5% this quarter. So our sense is it is making up for it. But definitely this is a subscription revenue growth rather than advertising in the near term.
Abneesh, you said you prefer PVR, and the content cycle seems to be coming back, at least lately, right? With there's Odyssey and there's a few others as well. Is that the bet here? It's obviously cheap relative to where it used to trade at, but what's the basic thesis? And they're trying lots of things, lots of new formats, experiments, trying to penetrate tier 2, tier 3 cities, and they're a leader. No one is close, right, in terms of the scale that they have. But what's the basic bet here?
Absolutely. I think this stock is preferred stock in the media space along with Saregama. So definitely, if you see in terms of capex, they have gone low asset model, so that will improve the return ratio. If you see in terms of consistency, we are seeing the numbers. You're absolutely right. Odyssey and now Spider-Man also, the kind of ticket prices and the occupancy we are seeing, those are very good numbers. So, and we have seen consistency coming back. Investors, especially the institutional investors, still media is not something which they are still having a lot of conviction because of the disruption. But I will say that if you see the way Z charged for FIFA in terms of 7.99, Netflix, etc., the kind of pricing we are seeing, there is an uptrend. The consumer is also willing to pay. So overall consolidation is there in the market, and definitely PVR is getting now more sustainable viewership. Plus, they have definitely become more flexible in terms of pricing for the off-peak. So I will say that yes, PVR looks ripe for re-rating, but unfortunately, institutional investor interest is still quite low in the media space overall because of the disruption fear which is still there.
Just a short-term tactical kind of a view, because I mean it's possible these two movies are doing great, but you need content like this to get people in to cinema halls, right?
Absolutely.
And that we don't know. Hopefully it'll be good movies, but this is a short-term view on PVR, short-term kind of tactical kind of a call on PVR.
Yeah, it's a trading stock till we see the conviction come back from institutional investors. But you are absolutely right. We will see good numbers in Q2 and Q3 also, because pipeline of Hollywood is small, regional is also doing well. Hindi also mostly it has stabilized. So I will say yes, it is a tactical buy call from our side. But ultimately here the compounding effect is still missing in the overall media space. So that's why we'll have to be more tactical here.
And very briefly, why Saregama?
Saregama clearly last 3 quarters has been good, and clearly they are seeing very strong growth in the core business. Even on the events business, they have deprioritized, which is again a good thing. So yes, Saregama again, strong numbers will continue. Q2 should be very strong. After Q3, the base becomes a bit unfavorable because last 3 quarters strong growth has been there. But again, valuation comfort is high. We have seen that overall there is more propensity to pay there. All the OTTs are becoming a bit more on the pricing bit higher. So we are positive on Saregama and PVR both, but Z will be lower in terms of pecking order. Yes.
And tomorrow, SAT will be hearing the matter about Z and Puneet Goenka trying to get a stay on the SEBI order, which prevented the company from going ahead and raising the 3,100 crores. So the SAT matter is listed tomorrow. So we'll watch.
Absolutely. The great conversation. Thank you very much, Abneesh, for that, and appreciate your time here on CNBC TV 18. Z, I think, is around about 5 this morning. Let's just take a quick look at where